me welcome on board Shalabh Saxena, MD and CEO at Spandana Sphoorty, joining in on the show right now. Shalabh, hi, morning. Welcome to ET Now. Shalabh, just going by your numbers, your Q4 has been pretty steady, both in terms of NI as well as PAT. But tell me, why is it that you've upped your provisioning by 17%?
Yeah, so good morning to you and your viewers. We as an NBFC follow the ECL model, and over a period of time, you have to keep refining the model. The model that we were following had various, without getting into the technical details, we refined the model to capture the more COVID and post-COVID impact. As a result of which, there were releases in a few SMA bucket, and there were obviously higher provisioning in another, the other two SMA buckets. So the net sum of it was that it wanted the model, which is a much more refined and more accurate model now. It projected a higher provisioning. We were at 70. It's the right thing to do. So that's why we stepped up the provisioning to 80%. So that's the reason. It's essentially the refinement of the model to capture the current times, which led to it.
Provisioning, our viewers would always say that, okay, provisioning has gone up, that means NPAs have gone up. Or you expect that some drop could happen in terms of the collection efficiency. But what you're telling us is that the increase in provisioning is not a reflection of which way the book quality is moving.
That's correct. It's essentially an outcome of the refinement of the model, and that's why we did what we did.
Would you be refining your model further? Should we expect such higher provisioning numbers going forward also?
No, we are done with it. We were holding this model. We were working on it. We looked at it. We looked pre-COVID. We looked post-COVID. We gave it about 2 years, and I think we are done with it. We'll continue this for now.
Now there are two ways to look at your numbers. One, your cost of borrowing has gone down, and your cost to income ratio has gone up. Normally these two numbers, they move in tandem with each other. Right now they moved opposite. Why is that?
Yeah, so one of the things that one has to understand when it comes to the cost of borrowing obviously is a factor of the liability franchisee improving. We've got good quality financiers and lenders and bankers, who kind of basis our record, we are getting a better rate. So, so that's the cost of borrowing part. On the OPEX side, Nikunj, we've invested, as I told you the last time around in your show, we have invested in new businesses. We've launched, last year we launched Microlab, we launched the Nano Enterprise Loan, which is essentially loans to shopkeepers. And apart from this, we fast-paced the growth and the opening of branches. So all of that has led to an increase in the cost, but this is more investment because the productivity for these branches will play out now. So it's more an upfronting and an investment into the infrastructure and branch, for which FY25 is where the productivity part will it will start playing out.
What is the outlook when it comes to your net interest margins as well? There has been a good move on a sequential basis. What are the factors that are aiding this? And do you see your net interest margins peaking from here on, or are you penciling in more upside?
No, so look, we will be comfortable with a NIM anywhere between 1375 to 1425. The reason why you saw the uptick was better management of timing, because carrying cost is what we've substantially improved on. You have to time both the borrowing and the disbursement in such a way that you do not really end up carrying a lot of cost, and finance cost is one of the biggest costs when you run an enterprise. So one of the good things that we did was the disbursements across the quarter were much more even. We timed the borrowings in such a way that we had a minimal carrying cost, and that's led to it. To your question in terms of what is a comfortable number, I just gave you anywhere in the neighborhoods of 14% is something that you'll be comfortable and and sustainable.
And how do you look at the outlook when it comes to your asset quality that has improved? Do you think that given that you have improved the provision and coverage ratio, that we can see further improvement in your overall asset quality trends?
Yes, so, just to turn the clock back about 3 quarters, we as a company and being in microfinance, Spandana was following a monthly model. we have attempted to move it to a weekly model because we think that weekly model is a much superior model. That led to some bit of disruption in the market, in our operations and in the distribution over the past 2-3 quarters. So another quarter, which is Q1 and Q2, we do see, we will take to kind of normalize this. Starting quarter 3, it should be absolutely BAU. On the credit quality side, we've guided that, we'll number which is less than 2% is something that we are comfortable with. And on a long-term basis, and when I say long-term means end of FY25, I think, that's a good number to target.
Most of the industry experts and including your peers, they are of the view that liquidity is still tight. If liquidity is tight, then why cost of borrowing is going lower? I mean, that's an industry phenomenon.
Yeah, so Nikunj, our history and our legacy, there, given the fact that we've been, we used to borrow at a slightly higher rate because of the past, which over the last 3 to 4 quarters, we've engaged with better quality financiers and lenders, which has led to the gradual decline in the cost of borrowing. Our last quarter marginal cost was about 11.7%. We further see on a 3 quarters to 4 quarter basis, we further see this going down by about 30-40 bips. This is more individual Spandana-led, phenomena where, there is a past and hence the costs were higher and now, we are more in the normalization phase. Once we reach at 12, 11, 20, 11, 30, that's one place which we are eyeing and we are looking at, of taking the franchisee to. That is when, we'll kind of evaluate our position, but that's another distance that we have to travel over the next 2 to 3 quarters.
So just to understand it for our viewers, your current borrowing cost is at 11.7, which means the aggregate cost at which you are getting money from your depositors, it is at 11.7, right?
Correct, that's right.
Okay. Now, from a market standpoint, if you're borrowing at 11.7, which is above what banks are borrowing at, it is something which you need to be, if you're borrowing at 11.7, you need to lend at least at 14-15%, I would imagine.
Yeah, so look, there is an element of OPEX as well, and then there is a credit cost. So, so there's the layers over and above. We are an NBFC, a non-deposit taking NBFC. So obviously our borrowings come from banks, from the capital market, from NBFCs, from the various financial institutions. So that comes at varied rates. Our cost of operations is about 7%, Nikunj, and build about 2.5% of credit cost. So, so that's how you layer the whole thing. Microfinance being a last mile delivery in the rural India, the cost of operations are high, because it's all physical people, who go there and, interact and engage with the customer. So, so that's the reason the cost and the lending rate and the borrowing rate of microfinance has to be looked at in that context.
If your cost of lending, let's say I would imagine if I put all the maths here, so then the cost of lending would be what, 18 to 21%, thereabouts?
Microfinance on an average operates in a range of 21, 22 to 23, 24%. It's a risk-based pricing. So a customer who comes in new, you charge him higher. A customer who's been with you for 4 cycles, 5 cycles, 8 cycles, obviously you keep reducing it because there's a moderation in the risk for that specific customer. So, so our range is anywhere between 23 to 24 and a half. So that's the range that we operate in.
All right. I was asking a very basic question just to, understand how the modeling and how things actually move. But Shalabh, fantastic. I mean, the turnaround at Sampanda in last couple of quarters has been nothing short of magical. So such a pleasure talking to you and thank you for your time.
Thank you. Thank you very much.
If you like this video, then like, share and subscribe to ET Now.